Amnish Aggarwal. He joins in on the show right now. Amnish, hi, morning. Great to have you on the show. Amnish, firstly, your observations, because, the reportage on the Q4 numbers seems to be very diverse from all of these players. Jubilant was in line. It was an above estimate from a Westlife, miss from Devyani, and a complete miss from Sapphire.
You see, the numbers have actually been very mixed because there is no, you can say, clear trend you can figure out from these results. But underlying two to three things are very clear. One being that the demand has been under pressure, not now, from the last 4 to 5 months. That is one. Secondly, the competitive intensity has gone up in the entire space. And the third thing is that the margins have been under pressure for most of the players, more so in the category like pizza, where due to the launch of, you can say, more value products as well as high raw materials, the pressure has been intense. And there is, I would say, no clear cut direction or the visibility regarding the sustenance of, say, little recovery which is visible in the, say, last month or so. So I think these are three, four key things which I could read from the results.
uh, we were just having a discussion in the studio as well about it, that food inflation, while of course it's going to come in with a lag, milk prices haven't come down. And given that for all these players, the large component is cheese, food inflation is going to continue to be elevated, and raw material costs are going to continue to be elevated for them.
Aisha, actually, there are three. One needs to dissect the QSRs into different segments for this. For example, if we look at, say, a format like chicken, where KFC is operating, and now to some extent Westlife is involved and Popeyes is there, the impact of inflation has been far lower. The pricing power there has been better, and the chicken prices are also softening. So the impact of, I would say, inflation is there, but not to the extent it is there in the other segments. The second segment is your burgers, where Westlife and restaurant brand Asia with Burger King, they are operating. There also, I think the impact of inflation has not been that high in comparison to other segments, because the players were able to take price increase maybe towards the beginning of the third quarter, and that has actually helped them. The category which is facing the maximum pressure is pizza, and the reason for that is twofold. One, as you said, that the milk prices are going up, but in pizza, nearly 40% of RM costs come from cheese. And the cheese prices also impact with a lag. So as the milk prices have been going up, so are the cheese prices. And although your inflation in some of the other inputs is softening, the cheese prices are unlikely to soften in the near term. So that pressure will remain. Although if you put together everything, then I think we might have already seen the worst, or we might be close to the worst. That is one part. The second part is the, you can say, launch of Flavor Fun Pizza by Pizza Hut, and subsequently a new range by Domino's under Pizza Mania. So that has seen some sort of, I would say, downtrading by the consumer in times of high inflation.
The P multiple for QSR restaurants is 40 plus. 40 to 60 is the P multiple 1 year forward. For a business which is under stress, and for a business where there is disruption because of cloud kitchen, competition within brands, where do you think a business which is growing at 12-15% or 15-18% should settle?
Okay, Nikun, there are two things. First of all, the long-term opportunity is definitely there. The second thing is the current situation is also because we have seen very high element of, you can say, increase in the number of these restaurants in the past, say, 3-4 years. And the third part is that lot of, you can say, smaller players, local players who had gone out of business during the first 2 waves of COVID, so they are also gradually coming back. Now, when it comes to P multiples, yes, I agree that the P multiples of some of these stocks, they are not cheap by any standards. But having said that, India offers a long-term opportunity, and that is why the investors, because if you can say, if you look at the consumption as a basket and then compare these QSRs with, say, staples, the structural growth rates in QSRs is likely to be higher than the growth rate in staples. So that is why people today are ready to pay a premium. But definitely, with the current valuations, I will be cautious in investing, it is not like that you can invest at any price. So in the long term, they look good, but in the near term, I would be cautious in buying at the current levels.
Just wanted to get in your take as well as to how much of a real disruptor ONDC is going to be for the food delivery business, and whether or not the duopoly, which is Swiggy and Zomato, are actually going to be threatened by this.
You see, it's too early to, you can say how much ONDC will impact. But having said that, I think all these large QSR players, they are also going to tie up with ONDC at some point of time. That is first factor. The second is you can say if the ONDC, your experiment works well, actually it will be favorable for consumers and some companies also. If it is able to provide them, you can say your cheaper delivery alternative on one hand, and the second is more depth in the interiors. So for say, very difficult to say at this point of time, but maybe say for a brand like say Popeyes or a Pizza Hut, or for that matter KFC, who depend upon with the brands which are depending upon third party delivery networks. So they could actually be at an advantage in future if ONDC actually becomes a viable force, and it might be a case then that they might be able to extract better deals with say Swiggy and Zomato.
So in your understanding, if you have to, let's say, recommend our viewers that should they buy the QSR stocks in this decline, would you say it's a yes or it's a no?
It's yes.
Okay. And that decline would be current level or wait for like a bad patch, 10-15%?
You see, I would be very stock specific. There is a potential that if the market corrects, because we have seen rallies in some of these QSRs by 20-25% in the last month and a half. So I would wait for a better entry point to make fresh commitments to the segment.
All right, appreciate your time. Thanks so much for joining in and giving us a view on the QSR space as well as those food delivery companies.